Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar slipped below the December low of 75 cents and crushed the support that was holding at 74.85 and recorded a fresh low of 74.72. It is now assessed that the market may slip lower, as like gold is weakening as well, and the Aussie could be looking now towards the June 2017 lows around 73.75 cents. In the short term, though, the oscillators are at extreme lows, and therefore it's pretty hard to get too negative in case we get a rebound due to the oversold implications from the RSI and also the stochastic. So therefore, a rebound could easily see a move towards 75.20 to 75.65, which will probably be a welcoming for the market to reshort the positions. Yesterday, as widely expected, the RBA kept policy stance at a record low of 1.5%. The RBA last moved in August 2016 when it cut the current emergency setting. In the statement, Governor Phil Lowe said he is expecting a gradual pickup in inflation as the economy strengthens. However, this is likely to be at the bottom end of the RBA's 2 to 3% target. At present, the market is pricing in just 30% chance of a rate hike for this year. An interesting price action as the market weakens further for the euro and the US dollar strengthens. Now, as some of us may know, the US dollar index measures the greenback strength against a trade-weighted basket of 6 major currencies, and with the euro weighting at 57.6, is moving closer to its target since the break of the 121.80 neckline. At present, I'm looking at 118. Now, overnight, we did get a fresh low of 1980. At present, the market is still quite happily to push lower and therefore could see an immediate target at 119.55 to 119.25 and now only just a couple of hundred points away from its measured move to 118 before reassessing. Tonight we have the Federal Reserve policy meeting. The decision is due on Wednesday in New York or Thursday in Sydney time at 4 a.m. It is widely expected that the Fed will leave rates unchanged upon the release, but the market will still be kept on their toes with the anticipated statement release. Also later this week on Friday, we have the US non-farm payrolls as well, where the latest forecast is at 185k, previous was 103. While the wage growth is forecasted at 0.3%, previous was 0.2. Unemployment is expected to come off a notch at 4.1 to a forecast of 4%. The dollar-yen case with the US dollar strengthening has broken above 109.70 just, which now looks to the next target of 110.55. It is ascertained that we could see even further towards 111.25 before the market likely to reverse. Support on the day comes in at 109.40. Well, the pound plummets even further overnight, taking further casualties. And what triggered the move was that the British manufacturing PMI fell to 53.9, well below the estimate of 54.8 points, with the previous at 54.9. Later today, we've got the British release of the construction PMI, and the market will again turn its attention to the US employment indicators, which is the ADP non-farm employment change, and then of course we've got the Federal Reserve to release its rate decision and rate statement. Since Mark Carney, the Bank of England governor, dampened expectations to any Bank of England rate rise in May, the odds of a hike has tumbled now around 30% compared to 85% at the beginning of April. It is viewed that that the market is probably now unwinding out of the potential rate hike in May. So we could be now looking later on down the track is what the Bank of England is stating, somewhere around August or November. My view is it still looks towards May, and we'll see what happens when we get to the decision. This decision this month. Looking at the target at the moment, well, the break of 138 did give me a 135 target. We are now heading there with the support at 135.35 to 134.95 to the figure. Resistance seen at 136.65 to 137.20.25. Do note that we could easily get any sharp snap to the upside purely to the fact is that we are really oversold and getting to a point where the ADX is starting to overheat. Well, gold tumbled further, even though the divergence is clearly in the window. The market should snap higher, with the bullish foundations once again under pressure, like it was back here in March, and also it was back earlier in the year. I do expect to see the market rebound from these levels and look towards the target coming in now on the top side at 1,311 to 1,316 to 20. If by chance we do close under 1,300, this will give further weakness to the next target of around 85 to 88. And rounding off with oil, well, the market did come in weaker and now looking towards the target of $66 a barrel, which isn't too far away, but we could even see it lower to $64, with the resistance at present coming in now at 67.90 to 68.80. So that wraps up for today. Thank you very much for joining me. I hope you enjoy the rest of the day that's ahead.